Duolingo stock investors have experienced a volatile year of ups and downs and are curious about the latest developments at the company and what do I think about the stock, whether it's buy, hold, or sell at the current market prices given its current situation. I'm going to evaluate the company's latest developments and share with you the details that management shared with investors. I'll also reveal my fair value calculation for Duolingo stock and then update my rating whether I think it's buy, hold, or sell. I'll do all that in this relatively short video, so let's get right in.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So, in a bit of positive news, the management team said that they had another great quarter, record profitability, strong top-line growth, and solid performance across all subscription tiers. As a result, they're raising their full-year guidance again while still investing in both their core business and exciting new areas like chess, which has been successful, math, and music that we believe will drive long-term growth. So that's good to hear for Duolingo stock investors that the company delivered another excellent quarter and the management team felt confident enough to raise the full year guidance. A lot of times, if a company delivers a strong quarter but doesn't raise the full year guidance, investors get concerned that it wasn't actually an increase in organic demand for their products and services, but it was just a pull forward of sales that were going to leave a gap over the next few months. And so the overall full year results aren't actually better. It's just a timing difference of when those sales came in. But with a beat and raise, that raises investor confidence that, you know what, maybe demand for their products are better than we thought. They went on to discuss daily user growth, daily active users, which just posted a 40% year-over-year growth rate in the second quarter. And that was coming off of a quarter last year where they increased their daily active users by 60%. So strong growth for 2 consecutive years, and it's more difficult to grow when you increased so significantly in the same quarter last year. Still, that growth rate disappointed investors because they told investors that they would grow this number between 40 and 45%, but they actually grew by 40%. So it was on the lower end of the range that management provided investors in the previous quarterly update. So that was disappointing, even though 40% year-over-year growth is excellent. But when you tell investors it's either going to be somewhere between 40 and 45, and you actually do 40, investors are like, oh man, we were hoping for something closer to the higher end of that range, or at least not near the very bottom of that range. And so that was a slight disappointment for investors, but still excellent growth when you zoom out and just look at the figures. So that being said, they are a little more pessimistic about daily active user growth in future quarters as a result of changes in their social media activity. Previously, they were more on the edge with their social media activity, but their sentiment regarding their brand turned negative. So they were a little too edgy for consumers, and so their sentiment turned negative. But they want to turn that around. They want the sentiment around their brand to be positive. So the management team said that they're going to be a little less edgy. And of course, the more edgy you are on social media, the more it drives engagement and the more people go to Duolingo. So the management team fully realizes that by taking a less edgy strategy, they're going to maybe have a more positive brand image, but it's also going to decrease the amount of attention the brand gets on social media, and thereby they get less consumer, they get less daily active user growth as a result. So management is fully expecting that. By the way, this document I'm reading from is the company's most recently completed quarterly earnings call with Wall Street analyst. I've made this highlighted document available for my channel members, and you can join for less than $5 a month. See the link in the description for all the benefits you get for joining our channel. These highlighted conference call transcripts are just one of the many benefits, and there are dozens and dozens of companies already available, and I'm adding to them regularly. Here's that comment where the management team is guiding to daily active users, or not guiding in this case, saying this time we're not guiding to daily active users, or we're not giving you any information about where we expect daily active users. And then, of course, telling us that that should tell you, kind of at least for the next quarter, we're not expecting a big change from where we are now. In other words, there isn't going to be significant growth. So don't expect anywhere near 40% improvement year over year. I wouldn't be surprised if the daily active user growth in the upcoming quarter is less than 20%, maybe even less than 10% year over year growth, based on what the management team is saying here about the daily active user growth in the upcoming quarter. And before telling us about this, informing us that they took a less edgy strategy on social media and marketing overall, which is not generating as much interest in the brand, which is decreasing the number of new users joining the brand. So in the near term, slower growth to be expected in daily active users. And of course, longer term, there is the huge risk of the increasing substitute risk, where new technology is coming out. For instance, ear pods are coming out where people can wear them and it translates when they're having a conversation with somebody in another language. So those kinds of technologies reduce demand for language learning, because you don't necessarily need to know the language in order to be able to communicate with other individuals speaking in other languages. And then, of course, you have Google Translate on your phone, which also makes it easier to communicate with other people who maybe don't speak your language. And so these technological advancements are reducing demand for language learning, which is a structural long-term risk for Duolingo stock investors. I've also done a discounted cash flow valuation, calculating a fair value for the stock. And today the stock price is down over 2%, which brings it down to exactly, not exactly, but almost exactly my fair value calculation, which is $329 per share. The current market price is $329.53. So it's trading at about a fair valuation, which for this particular stock, I would not be buying at a fair value, because the risks are increasing. Not only are they facing structural long-term risks to their demand of their products, but they're also facing near-term risks as a result of this change in marketing strategy from the management team. So all that being said, I would not want to be buying Duolingo stock at these prices. So I updated my buy, hold, or sell rating to a hold. It's been rated as a hold all year long, and I updated that hold rating today.
Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.